While two of the world's biggest economies have been sparring over trade tariffs, Vietnam emerged as a clear winner in the long drawn-out trade war. The economy of Vietnam has improved by almost 8% because of the shift in production resulting from the US-China trade war.
So when the trade war started, first Vietnam was already well positioned, not only geographically because of its proximity to China, but also because of the openness of the country, of the government towards foreign investors.
Vietnam is seen as an economy and society very similar to China. For example, it's communist, it's one-party rule. It's also, in terms of organization, Confucianistic.
The country's proximity to China is particularly suitable for companies that want to move manufacturing operations to Vietnam. Instead of abandoning the Chinese market, investors are choosing to supplement Chinese operations with low-cost inputs sourced from production facilities in Vietnam.
The companies had a lot of supply chain exposure just to the China market or the China geography. So there has been a desire to maybe have a diversification in place so that if something happened in China, that you had a backup option. And also recognition that as China's wages were rising so fast, it was going to not be as cost competitive in the future as it was at the time.
It's all about not putting all your eggs in one basket. It's about having China still as a very strong part of the value chain, but it's about not being completely entirely dependent on China.
The currency is incredibly stable versus the US dollar. Growth is strong, inflation is low, the workforce is smart and hardworking and kind of a sweet spot demographically. There's no question that Vietnam's kind of stability and integration in the world economy, that's going to continue, and I think that that gives a lot of confidence to companies and investors that are looking at Vietnam.
It has attracted a plethora of multinational companies, including Intel, Samsung and LG, all of which have made huge investments.
We talk about Vietnam's export success story. I mean, a big chunk of that is actually Samsung's manufacturing export success story in Vietnam. And South Korean companies have been very, very big investors, not just Samsung, but others as well, in Vietnam.
Vietnam has many trade advantages over China. Labor costs are cheaper, and the country is a signatory to many bilateral trade agreements. And despite its trade surplus with the United States, the Trump administration thus far has been pleased with Vietnam's multi-billion-dollar purchases of American goods. Can Vietnam be the next China?
No, I don't think Vietnam can become the next China simply because it doesn't have the scale. China has massive scale. China has been building infrastructure for 3 decades now. And China has very, very intense critical mass when it comes to certain sectors within the global value chain.
So if somebody comes here and they say, I'm making 2 million shoes a year, where can I set up where all of a sudden I can just get 50,000 workers? And that's not so easy. You know, we say, well, 8,000, 10,000, no problem, but 50,000, much more of a challenge. And as people look around, they realize, hey, this is why we were doing this in China. It made sense for companies to be there.
So Vietnam is never going to have that same dual attraction of an export manufacturing base with a very attractive domestic market to service as well. The Vietnamese market is much smaller, partly that's about population, but it's also about just very low levels of GDP per capita.
But the COVID-19 outbreak is also a grim reminder of the extreme concentration of manufacturing built up in China.
I think that a lot of the business that left China is not going to come back to China. I think that what we see right now with the coronavirus, it certainly helps reinforce what a lot of companies already knew, which was it's very risky to rely too much on one country for your supply chain or your business plan.